We are officially less than 3 years away from taxes going up. Are you ready? I'm Spencer Ford, CEO and Wealth Advisor with Conservative Financial Solutions, also a certified financial planning professional. And in 2017, with the passing of the Tax Cuts and Jobs Act, most Americans saw a reduction in their top marginal income tax bracket. Those in the 15% bracket saw a reduction to the 12% tax bracket. Those in the 25% tax bracket saw a reduction to 22%, and the 28 to 24%. But all of that was temporary, and at 11:59 p.m. December 31st, 2025, the current brackets we find ourselves in are set to expire, causing many Americans to pay more in taxes. And Congress doesn't have to pass another bill for this to happen. All they must do is just let the current tax law play out as it's currently written, and tax brackets are going to go up. And so that begs the question, what are you doing right now to take advantage of the fact that taxes are on sale? If the answer is nothing, then you're missing out on potentially saving thousands of dollars in taxes. I've mentioned this in other videos, but the average American will pay $525,037 in taxes throughout their lifetime. That's average. And if you're currently sitting down watching a financial video, chances are you're above average, meaning you stand to pay more in taxes over your lifetime. Now, unless you want to end up like Al Capone, you're going to pay some in taxes over the course of your lifetime. But wouldn't you like to pay as little as possible? I know I would. So here's a couple of strategies that you can consider and how it might help you take advantage of these current tax brackets that we're in. So number one is, if you're still working and you're contributing to pre-tax retirement accounts like a 401k, 403b, or IRA, find out if there's a Roth or after-tax option available. If so, consider switching those contributions to the Roth option. By doing this, you'll be paying taxes now instead of deferring it until later. But ask yourself, if you know your taxes are going to be higher in the future, why would you defer paying the tax now just so you could give more of your money to the IRS later? The answer is you wouldn't, but if you continue to contribute to those pre-tax or those tax-deferred accounts, that's exactly what you're doing. Now, number two is, if you already have a bunch of money inside of those pre-tax retirement accounts, you might decide to voluntarily pay some of that tax now and move that money into a Roth or after-tax account. This is known as a Roth conversion. Again, if you believe taxes are going up, why not prepay the IRS at a lower rate instead of paying them at a higher rate in the future? And this strategy can work for those that are still working or retired. Now, when doing Roth conversions, it's important to keep in mind certain limits. So one of those limits would be, okay, the current tax bracket that you're in. So if you're in the 12% tax bracket and you're going to be in the 15% tax bracket in the future, well, it doesn't make sense to bump yourself up into the 22% tax bracket, but it does make sense to fully utilize your 12% tax bracket so you can pay as much tax as possible at 12% before you end up in the 15% tax bracket. The other thing that you want to pay attention to are those other limits is, if you increase your modified adjusted gross income to a certain point, you're going to have increased Medicare Part B and Part D premiums. That's known as the income related monthly adjustment amount. So again, you just don't want to be surprised by having to pay more in Medicare Part B and Part D premiums if that's applicable to you. Certainly you don't want to pay any more than what you're comfortable with. We've been sold this myth that taxes are likely to be lower in retirement, and I believe it to be just that, a myth. The government is looking for ways to bring in more revenue, and where does the government get the bulk of its revenue? From us, through taxes. Now, I can't get all $525,037 back for you, but with some planning, you can mitigate what you pay in taxes. And this is why it's important to work with a financial planning professional that understands taxes, and the longer you delay to start planning, the less time you have to take advantage of the brackets that we're currently in. So if you're looking for some help, please call the number on the screen. You can talk to one of our wealth advisors. Otherwise, my name is Spencer Ford, CEO and Wealth Advisor with Conservative Financial Solutions, where we celebrate conservative beliefs, conservative values, and conservative financial solutions. And we'll see you in the next one.